All right, hello everyone. It's been a couple crazy days in the market, so we're going to take a look at some things. Now, let me just put something right out there, okay? If you're here listening to me right now, it's probably because you've lost money in the market. You're not just surfing YouTube for the hell of it. Well, maybe you are. I don't know. Maybe you should get a better social life. Blah blah blah. That's another. Maybe I should start another site like dating advice. But anyway, let me go back to the market because that's really what my expertise is. So if you're watching this, it's probably because you've lost money. So you have a problem. And I think that if you listen to me, I'm not perfect, but it could change. It could transform you into a better trader. Okay? I'm not saying like a lot of people do on the internet. It's like blah, blah, blah. I'm a perfect genius. I can make you 1,000,000% a year. No, that's not how it works on Wall Street. Okay. And the reality is that it just takes common sense, understanding supply and demand, economic theory, price levels, and that's it. And it's like anything in life. If it seems too good to be true, it probably is. So if someone's like, "Oh, I can make you $1 zillion a year. You just got to send me a check for $5,000." I would not entertain that. And if you have any questions, if you think that maybe someone is trying to scam you or you have questions, mark at stockmarketjobber.com or check out the Benzinga Trading School, which I teach, which is an incredible, in my opinion, it's an incredible school. So, why are you here? You had a problem. You want to change. You want to transform. And I get it. What are the expectations? Well, you're not going to be able to turn $200 into $1 zillion overnight. But if you have a defined strategy that's logical and you understand it and you understand the psychology of trading and what you do wrong and what you do right, that's where you're going to make the money. All right. Again, if it sounds too good to be true, it probably is. So I would encourage you all to come back here and check us out. We're here every morning at 8 Eastern Time. And most of the time I do a market review, unless I'm playing golf. But if something is really important, of course, I'm going to, you know, come check it out as opposed to playing golf. All right, so let's just kind of go through the markets here. I think kind of the main thing that's going on here, which has made the market soar, is this big move down into the treasuries, right? So, or I should say interest rates. Interest rates are important to the market. 9 out of 10 times the what they're saying on the media is not why the market is moving. Okay, so shut the media off, shut CNBC off, shut all the market gurus. Watch the market tell you what to do. Let the market tell you what to do. Then you can check out the market and market tells you what to do. And then you can spend the rest of the day being like, all right, dude, I'm going to go to the beach. I'm going to go on a hike. There's so much misinformation spewed out there. And I'm not saying people are dishonest and I'm not saying they're trying to rip you off, but most of the media are former journalists. They're not former traders, so they really don't know how the markets works. But anyway, this is one of the reasons for the market moving up. We've had this massive sell off in interest rates, which means a massive rally in bonds. All right. So, in my opinion, the market has come so fast and so far, we are going to be looking at some profiting. Now, the health, everyone talks about the Magnificent Seven, which is the dumb one of the, I mean, I've seen some dumb stuff in my career, but, I mean, Wall Street is amazing for putting out dumb stuff. The Magnificent Seven. Although I do like, those Magnificent Seven movies. I think one was like with Yul Brynner, right? Where the town is getting raided and they hire seven vigilantes or whatever. And that was based on a movie from Japan where the town hired seven samurais. So anyway, Yul Brynner is a bad you know what, and I mean that in a good way. I would encourage you to see that movie. All right, so let's look at our healthcare sector. We got up here and we ran into some resistance. Why is that? Why did this sector that's worth trillions and trillions and trillions of dollars just happen to hit resistance? Resistance is a level where there's more supply than demand. So markets go up when there's not enough supply. So the demand, meaning the buyers, are forced to be willing to pay a premium to get the sellers off of the sidelines. That forces an uptrend. When we get to resistance, for whatever reason, that's where the sellers come out. Here it's because, all right, people bought back here and they're trying to sell to get out up here. People bought here and it's like, now we're underwater. I mean, it's probably happened to you. Be honest with yourself. Have you ever bought a stock you sold and it went up and you tell yourself, I made a mistake. If this thing gets back to my price, I am going to buy it back. Or have you ever bought a stock that goes lower and you tell yourself, if this gets back to my level, I'm out. So anyway, there's a reason why we get resistance at former resistance levels. Now, a lot of times we sell off of resistance because some of the traders who are watching this thing go higher are like, it's not going higher anymore. So that must mean there are new sellers coming into the market. So I better reduce the price I'm willing to sell at, or I am going to miss out. The buyers are going to go to whoever is willing to sell at the lowest priced. So that's our healthcare sector. It doesn't get the respect it deserves. Let's look at a couple of these biotechs before I got to get going here. A lot of our students are asking about this, the ABIV. Like, what do you do? Interesting thing here. Check this out. I'm not making this up for the hell of it. Markets tend to run into resistance at former resistance levels. Resistance here in August. Resistance here in September. Resistance here now. Again, psychology. There are people who bought here, and they're like, I'm underwater. Now I can finally get the hell out of this. Okay, I'm going to get out of break even. So you have remorseful buyers placing sell orders, and that can create resistance. And there's a good chance that some of these sellers are like, wow, the market's not trending higher anymore. So that must mean there are new sellers coming into the market. So I better reduce the price I'm willing to sell at. And that could start a snowball effect. This is why we sell off of resistance. Forget the news, forget Jerome Powell, forget this, forget that, blah, blah, blah. Just worry about the psychology. When you look at this chart, don't think about what stock this is. Think about, wow, what does this tell us about the people who are trading it? All right. So here at Stock Market Jobber and at the Benzinga Trading School, we don't have any perfect answers. It can't be done. If someone had a perfect answer or a perfect strategy or a strategy that never failed, guess what? I mean, you know what I'm about to say. Everyone would do it. So forget all this garbage like Gann theory, Fibonacci, Elliott wave. What I teach is pay attention to what levels are important, what's the momentum, what's the trend, and what's the psychology. And that's what you need to focus on. Now, we could be setting up for a decent reversal. How would you play that? I don't like the word play. I know I say it because everyone does, but we're not playing here. We're here to make money. So I would like to say exposure. But one of the things at Stock Market Jobber that we look at here and at the Benzinga Trading School, they're one of our partners, is these directs on ETFs. You don't need to be an options trader. You don't need to be a futures trader. If you think the market is going to go down, there is ways to profit from it. For example, this ETF here, and these are not recommendations. I'm just trying to educate you a little bit so you know they exist. If you think energy is going to go up, if you think oil is going to go up, well, you could buy this just like in a regular ETF, just like buying Apple. There's no sophistication. It's really pretty simple. If energy goes up by 1%, this will probably go up by 2%. If energy goes up by 2%, this will go up by 4%. This ETF is structured to move up if the energy sector moves lower. If you think energy is going to move lower and you're not a futures trader or you're not an options trader, you could buy this. This is going to go up. Energy down 2%. This will be up 4%. We got the same thing with gold. So I want you to check back here, okay? I want you to come back because sometimes the market is boring and sometimes it's better to hang out on the beach. But considering the move that we've had in some of these sectors and this whole thing with, interest rates and Powell and yada, 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 I've been a trader for a long time, more time than I care to remember, whatever, 30 years, blah, blah, blah. When I first came in, the CTFs didn't even exist. But sometimes it makes sense to stay on the sidelines. Sometimes you got to be ready to move. And that's where we are now. This market has made incredible moves, and incredible moves tend to precede incredible moves going the other way. All right, everyone, thank you so much. We will be here, me and my partner, Born to Be, will be here tomorrow at 8 in the morning. Please tell your friends, please send this out, and we will see you then.